Hi, I'm Betsy, and this is CAM Matters. I have a special guest for you today. We are going to be talking with Phil Massi from Assured Partners about insurance and the requirements that community associations should have and some things to look out for. And as usual, Phil has some stories to tell. Come join us.
Welcome to CAM Matters, Condos, Co-ops, HOAs, and beyond. Betsy Barbieux is an informational leader in Florida on community association living, rights, and obligations. She is an expert on the rights and obligations of owners as well as the association. If you live or are planning to live in the state of Florida, there's a good chance you'll be part of a community association. And by the end of this show, you'll know a little bit more about community associations and why they matter.
Hi, welcome to the show. We're so glad that you're here. I'm Suzanne Lynn with Betsy Barbieux, and today I'm excited about the show because when Betsy brought up this topic, I thought, oh my gosh, I've never thought of this as a homeowner living in an HOA. So I have a lot to learn today. I'm going to do more listening than talking so I don't embarrass myself. Betsy, we have something special though.
We do, and I am so excited to say that we have Phil Massi. He's from Assured Partners. He is one of my favorite insurance agents.
You've been going on.
And I'm going to make a whole lot of other my insurance agent friends mad, but
maybe they can come on sometime.
I have asked Phil to join us today and give us some information and keep it simple for the general consumer of what we need to know about insurance. And we're actually coming into hurricane season, so I think he's going to focus on that.
I think that's very timely.
Hi, Phil.
Hi, how's it going? Thanks for having me.
We are so glad to have you. How many years have you done insurance work?
Believe it or not, about 15 years I've been in the insurance business. So I started in 2005.
Okay, he is my go-to person. I'll make a bunch of people mad.
So can I just jump in real quick? So basically what we're talking about today is insurance that's needed over and above personal homes.
Yeah,
I never thought about coverage of the clubhouse and the pool and slip and falls and things like that, right?
I won't say duh, but but
you can. I deserve it. Hashtag duh.
But yes, you have your homeowners, whether you're condo or HOA, you have your stuff insured, but think of all of the property.
Sure.
Think of the clubhouse. Think of liability.
Oh, yeah.
What about those people who sign checks? Does the association get protected from anybody stealing money?
I guess we're going to find out today.
No, let Phil tell us. And Phil is one of my best storytellers.
Oh, good.
And I bet he has some worst case, best case scenarios and what owners and boards and concerned owners probably need to look for. So, Phil?
What I figured I could start with is just letting everybody know the basic insurance coverages any HOA or condo would purchase and can kind of walk you through those so to help some people listening and maybe in the same spot thinking I never thought about my community association insurance before.
Okay.
So I kind of walk through a few of the basics. So property insurance is going to cover if you're a condo, it's the most important. It's the roofs and walls of the buildings. If you're an HOA that insures like connected townhomes, you may still have a property policy that protects the outside of the buildings, or you may not. And then in HOA, you've got your clubhouse, which can be significant in some situations, as well as other amenities, walls and fences and pools and cabanas and things like that. In the event that any of these are destroyed by fire, wind, sinkhole, car drives through them, which happens more than it should, lightning, the coverage is provided by the property policy of the association. So property insurance is the first, biggest, most fundamental one here in the state of Florida. And some small HOAs may not have any property, but most do. Then the next one is a general liability policy. This is going to be for any most common claim is a slip and fall. So you've got somebody who slips and falls outside on the community property. So on a sidewalk, inside the clubhouse, by the pool area. But anytime a third party suffers bodily injury or property damage that they deem the association to be negligent for, that's going to be the general liability policy. So we've
got a lot of lawyers here in Florida that are just dying for people who forget to get that insurance, right?
Well, you see, the Morgan & Morgan posters and everything. There's been a lot of that in Florida over the last 5 to 10 years. If you go back, even when I started doing this 15 years ago, when we had someone slip and fall, the claims used to close out for, what I used to think was maybe 10,000 was like, I can't believe they got that much money. But now these average slip and fall claims are easily $50,000 and more. I mean, I don't, it's not uncommon now to see $200,000 payouts for someone slipping and falling and hurting their back. It's gotten so bad that the liability premiums used to be so small for these HOAs, and they are still pretty small, that one claim in every 10 years can blow out any type of profit margin. So a lot of these carriers have been exiting the state of Florida, and it's becoming more difficult to find good insurance policies for prices that we used to pay. I mean, a lot of that stuff is gone, and most of that is because of those slip and fall claims. That's probably the leading cause of it. And then what Betsy brought up before, crime insurance, it's actually required by the 718 and 720 state statutes. So whether you're a condo or an HOA,
and 719, it's also required in 719.
Correct. And that protects the financials. So you've got money in the checking account, reserves against theft by a board member or third party or a property manager. So those, I've had 4 associations in my career completely wiped out. So usually when people steal money, they don't stop at just taking a little bit. They take as much as they could possibly take. Usually is everything. So that's always bad when you find out that there's no money left in the account and all the reserves are gone and somebody's ran off to Mexico with it. So some ideas there are bad. Then you've got the directors and officers policy, very important for board members. Is going to cover them for decisions that they make. When you think of a D&O claim, it's not usually bodily injury or property damage related. It's usually financial. So someone has a financial loss, a collections issue, or they're trying to make you do something like overturn a decision. It's some sort of action they're trying to require. Those are going to be D&O policies. And I myself sit on 4 condo boards here in Central Florida. So I don't know what I did in a prior life to deserve that. But
I was going to say, sucker. And I don't know. You ought to know better than that.
All right. I got a question. What's DNO stand for?
Directors and officers.
Director and officer.
Directors and officers. It's going to cover the directors and officers. It's going to cover committee members and property managers as well in the association. And the reason I got on the boards that I got on more than anything was to just become more well-rounded and improve myself as an insurance agent. I feel like I can do more for my clients if I've sat in their shoes and had to make those decisions and do those things. Yeah. And I started out as president of a small, HOA with 144 homes. I did that, we moved, and then I ended up on these condo boards. I'm on my architectural committee for my HOA I live in. So I've tried to live it and walk it too. So I can say that.
That's valuable. That's valuable.
Yeah.
And then the only other major one is going to be the umbrella or the excess liability policy that's going to sit above the general liability and the D&O, and that's going to protect the association in the event of any large kind of worst case scenario losses. Usually you think of like a drowning or a partial drowning in the pool, paralysis, diving in the shallow end. You could see, which we've had, a security guard, rape and murder someone in the property. That's bad, but it's happened to me personally just a few years ago, one of our accounts. So things like that, somebody child getting hit by a car, bad things you don't want to think of, but that are going to go above the $1 million limits that you have on your underlying policy. You want an excess or umbrella policy to sit above that. If you don't have one of those, then the association's financials, your assets, you're assessable. It's a bad situation. So $1 million does not go a long way anymore. In fact, the $1 million limit started in 1984-ish. So you got to think, adjusted for inflation, that's about $4 million today. So you really don't have much with the $1 million. I mean, they'll burn defense costs pretty quickly too. So very recommended for the umbrella.
Are these all required? I mean, I only remember a couple of them that you said, but I mean, they should be all like state mandated.
Well, the crime policy is state mandated.
Okay.
But the others are usually document driven. Remember these?
Oh, yeah.
Remember these documents that you like for me to wave all the time? Usually the documents say what the other insurance should be. But as a best business practice, they ought to have those whether they're compelled to have them or not.
Yeah, the only one there you wouldn't buy the property if you didn't physically have property on these small HOAs, but the rest you got to have. And for me personally, we won't insure a community unless they buy all of those main items as well, because we don't want to get caught up in one of those scenarios. And you will see boards sometimes say they don't need an umbrella. They argue why that's not necessary. And I just think it's so short-sighted because, I mean, I've seen claims on 100-home HOAs in the multi-millions of dollars, and they had no amenities. It was one where a girl was climbing on a fence and fell off the gate, and the gate partially suffocated, had brain damage against the curb. I mean, it's horrible, but that happened at a place that had no amenities other than a gate. So to say that it's not going to happen is not smart.
I will just say that as a homeowner, I assume all that is taken care of. Like I've never heard anyone bring up anything about insurance, and I assume it's taken care of.
As a manager, I don't know that I ever get a potential buyer asking.
Definitely.
Their mortgage companies ask.
Right.
But the individual buyer, I haven't ever had them ask what kind of insurance do we have. But I know Phil has some stories about hurricanes.
All right. I'll tell you what, we're going to take a little break and go into story time on the other side of that. So hold on, we'll be right back.
Okay.
Are you ready for a new career? Do you have skills or interest in management, real estate, construction, maintenance, accounting, strategic planning, project management, budgets, human resource management, lawn and landscaping, pool services, or any other expertise needed to operate a community association? If you do, community association management could be for you. For more information, feel free to email Betsy at betsy@floridacamschools.com or visit the Florida Cam Schools website at www.floridacamschools.com. Florida Community Association Management continues to grow. Career opportunities abound.
Welcome back. Suzanne Lynn with Betsy Barbieux, and we're just talking with Phil Massi, and we're moving into story time.
Yes. I want him to tell us a really bad story.
Bad one first?
Tell us a bad story.
Well, I scare everybody on here. I've got bad stories forever. So one of the worst case that I've seen occur was at an association here in Orlando, 400-unit condo, where the association had a water loss in one of their units. So a pipe had burst and water came into one of the units, and they hired a vendor to come and dry that unit out. The unit was actually vacant. It was one of the kind of an abandoned unit sort of scenario. And so they still have to dry it out, and they can't not do it. The vendor left a generator, because there was no power in the unit, running in the unit, and it ran overnight. People started going to the hospital. Actually, people went to the hospital, which is lucky. Fire department tested them, carbon monoxide poisoning. They came out and were just breaking down doors and pulling, families and women and children and stuff out of their rooms, passed out. So no, it's a horrible scenario. And obviously the vendor made a mistake there. But what was worse for the association is that afterwards, they obviously had several multi-million-dollar lawsuits that came against them. People claimed white matter in the brain or whatever the situation might be. And the association's general liability policy actually doesn't have coverage for carbon monoxide. It's a pollutant. So you need a pollution liability policy, which virtually no association purchases. And you would expect the vendor to have pollution liability if they're a dry out company. That's pretty common for this type of thing. But the vendor they hired was just a rug cleaning company. They didn't have the pollution liability policy. So they didn't have any coverage. The association didn't have any coverage. And then it ended up, they were self-insuring $25,000 to $50,000 a month in legal bills, trying to defend themselves, and then eventually filed bankruptcy. So if you want to see how an association gets to bankruptcy, that's an example of how that happens. The insurance is not there, and the exposure is so high that you can end up in that scenario. That's kind of a worst case. I mean, there's a lot of other things going on there, but
we need to move into a positive story at this point. That's really sad.
Well, I've got good stories, so I mean, there's definitely good and bad, so I can jump right into that because it's hurricane related.
Tell us a good story that
Sure.
turned out well, and then tell us the difference between the two.
Sure. So I would tell you that, like I've got a community that has 30-year-old roofs. All right. So the roofs are really old. Normally a condo association should be replacing those roofs before 30 years, right? Kind of stuff that, was originally put on in the 80s. That's a problem. They had good insurance. They had no money though. So they didn't replace the roofs because the roof fund was virtually zero. They weren't reserving correctly. Well, Hurricane Irma came around, caused damage to the roofs, and the association's insurance policy, which was with us, had a very low deductible and had full replacement cost value on the roofs. And so the claim paid out close to $2 million. The association got all brand new roofs put on and still had some money left over to paint buildings and do some other stuff. So it was a significant win, because without that, the association was underfunded on reserves, would have been having to assess people to do that. And now the association got kind of right-sided due to an insurance claim. They had a big payout, which enabled them to get the buildings and roofs all fixed up the way they needed. And that was significant. So that was a very big win coming from insurance, that if they didn't have that insurance policy, I don't even know what would have happened in that scenario.
Okay. And one of the differences here that I hear with your first story was they didn't probably do their due diligence in hiring the right vendor with the right insurance. And so that's really important to check vendors.
Oh, yeah. Huge. I mean, I go all day on the vendor angle, but making sure you're using reputable vendors and that they have the right insurance coverages is big, because if the vendor creates a problem on your property and the association gets sued for it, you should be able to tender that claim to the vendor to defend you, indemnify you. It should be that way in the contract. That's natural for any vendor working for you. But if they don't have good insurance, then you're just you're sitting out there exposed as well, especially when it comes to pollution related losses.
Yeah, and I know with the boards that I have to fight with them all the time to make sure that I've got a certificate of insurance from the vendor's carrier, and business licenses and W-9s and all that. And they go, we don't need all that. He's just going to clean the pavers.
Oh yeah, no, and we see it all the time. This guy was no doubt the cheap vendor, I would assume. They paid a little bit versus paying more than they would have to have a reputable quality company in there, and they ended up bankrupting themselves over it. So like, you look at your decisions, and I've seen it before with as much as just cleaning companies spraying fences and overspraying and damaging 20 different car paint jobs, and then having suits. I've seen all those type of scenarios. So it can be the littlest vendor to the biggest vendor, but you've got to be diligent or vigilant with the vendors, making sure they have the right insurance coverages, and you're not going with the cheapest guy.
Yeah.
I know, going on a whole nother topic there.
Yeah, right. We'll have to come back to that. But I'm just thinking about hurricane season right now. And when you talk about Irma, oh my gosh, we're looking at a more aggressive hurricane season this year.
And so they say. I hope not.
We are. So unfortunately, they're calling this a hyperactive potential season with 20 plus storms. I mean, a significant one with the most recent outlook. Well, obviously, we hope that doesn't happen. I can't even imagine what the shelters and stuff will look like with the whole coronavirus situation going on. So it's a double whammy for the Southeast. There's no doubt about it. Plus, insurance rates have increased over the last few years, particularly on the property. So that's only going to continue to harden if we have storm damage anywhere really in the Southeast. But I think the biggest thing you can do going in the storm season is mind two big things on the property policy. Whether you have a big clubhouse, $1 million clubhouse, or you have a condo association where you're insuring the buildings, there's two big things on every property policy you have to pay attention to. The first is the hurricane deductible. So the difference between what you can have in Central Florida, a 1% hurricane deductible versus potentially a 5%, is significant. It doesn't sound like a lot, but a 5% on $1 million is a $50,000 deductible in the event of a storm. 1% is $10,000. If you got 10 different $1 million buildings, that's a $500,000 deductible versus a $100,000 deductible. So the difference in the lower deductibles is huge. You'll clear so much more money after the claim if you're not having to self-insure that large deductible piece. The other big thing is the valuation of the roofs. A lot of insurance carriers will get crafty, and they'll say that the roofs that are older than a certain amount of years are valued at depreciated value or actual cash value, which means the insurance company is depreciating your roofs, kind of like your car insurance. You don't want that. That's bad. You want replacement cost, which gives you 100% of the cost minus the deductible. Because if you have a worst case scenario, which is another bad one I've run into, where they have actual cash value on the roofs and a high deductible, like a 3% or 5%, there's not going to be anything left. So you're not going to have a big enough claim to actually trigger any money. Whereas if you had replacement cost and a 1% or 2%, there'd be a lot more money there to do things with that you need after a claim.
And the condominium statute requires replacement cost coverage.
Everything's going to want replacement cost coverage, and the policy is actually going to say replacement cost. There's just going to be an endorsement that says roofs older than X are at ACV. That's where they catch you. So no one's going to, and a lot of times the agents that don't know what they're doing don't even know that that's on the policy. So the associations certainly don't, the managers don't, and it becomes a problem once you get into the claim and you realize you're getting a lot less than you should because the roofs are being depreciated at actual cash value. That's
Wow.
what
So
value actually.
it's an endorsement that's on that property policy?
Yeah, pretty much. I mean, you'll see it
Okay.
with several carriers
Okay.
that way. And
Well, I'm going to take a look.
Yeah, no kidding.
yeah, it could be an issue. And again, the HOAs that just have a clubhouse, the clubhouse is big. A lot of times can be significant, and that could be in itself a very large deductible. And obviously, the roof's an issue. But this is especially prevalent in the condo world because you're going to have buildings, unfortunately, that didn't get replaced last time when Irma came through. And now Charlie is 15, 16 years ago. It happened in 2004. So you're going to run into even people that replaced their roofs after Charlie could now be falling into that 15-year range or 10-year range if some carriers have that, where they depreciate the roofs, even if they were replaced back then.
Wow. Wow. Phil can go on for a long time.
I am blown away with what I didn't know, what I know now. But so as the common voice, because you two understand this insurance speak and everything.
He does.
But as a common just homeowner, I guess as we wrap up, is there any possibility if our HOA or condo or association that we're living in isn't properly covered and something like that happens, a bad scenario, can it come back on us? Can we be held responsible and liable?
I'll let you answer that, Phil.
Yeah, it's a great question. And I hate to end on a bad note, but yes, it absolutely can. And the whole point of the insurance policy is to defend the association, but the association only has finite funds. You all know this. So if you've got $200,000-$300,000 in cash in the account and operating in reserves, or even $1 million, and you have a multi-million-dollar loss that occurs at your community, the carrier is going to only pay what they have in coverage, and you're going to have a shortfall between what the association has in funds and then what the association obviously can pay in damages. And then the association's next step is going to be to pass an assessment to all the owners to make up that difference. If they don't make up that difference, then you're going into bankruptcy like we talked about before. There's not a middle ground. So the association is going to have to assess to pay the difference, and then also to assess to bring their funds back up to where they needed to be before they were kind of wiped out by that scenario. So an uncovered loss or a large judgment, like a drowning claim that, let's say they get $3.5 million and all you have is $1 million in liability, that's a $2.5 million self-funded obligation there from the association that you're going to have to pull from owners. So you definitely want to make sure you have the right insurance. And the one point I'd leave with everybody is there's a lot of insurance agents out there, and there's some that specialize in community associations, but there's a lot that don't. Use an insurance agent, whether it's us or someone else, that specializes in community associations, that's involved in CAI. For example, myself and my partner, Nagar Sharifi, we both have our CERMS designation, which stands for Community Insurance Risk Management Specialist. There's only 7 of us in Florida and about 100 around the country, but it's the highest designation an insurance agent can get to specialize in community associations. So for the same reason you wouldn't hire Morgan & Morgan to be your association attorney, you shouldn't hire, an agent that specializes in construction to be your insurance agent at a community association.
And I can attest to that. We have some really nice, good insurance agents in the area, but they don't specialize in condominium insurance. And when I look at the policies, you can tell.
Wow.
They don't have the right coverage. And again, I don't want to end on a bad note, but I do want to say thank you so much, Phil, for joining us. I think that it's been very informative for us and hopefully our audience. And thank you so much.
You're very welcome. Thank you guys for having me. I appreciate it.
Thank you.
Thank you for listening to CAM Matters. Be sure to subscribe so you don't miss any future episodes. For more information, feel free to email Betsy at betsy@floridacamschools.com or visit the Florida Cam Schools website at www.floridacamschools.com. Information provided on this show is general in nature and does not constitute legal advice. Please contact a licensed attorney for your specific situation.